Alrighty. It is Thanksgiving Eve here in America. We'll see how they play it out this morning, but the markets have been relatively slow. There is some comfort level, I think. Let me say this too. Good morning, good afternoon, and good evening. Somewhere. There's a comfort level about the Federal Reserve only raising about 0.50 instead of 0.75. That's just one of the, I guess, impetuses. No, I guess it's I guess you could say the fuel that's basically supporting the market here. That's what we're seeing there, and I keep on seeing more strength, not less strength. So that's where we really stand this morning on this whole action of the market in general. Let's get there's the dollar index right there, and that's the reason why the dollar index has been working its way down. I'm seeing the 10-year. I remember saying to you yesterday was down to 3.80. It's down to a little under 3.76 now. So they're starting to put the money into the marketplace, like as if interest rates will stay high for like the next 6-7 months. That's what pretty much by, I guess you could say by July or August or even June of next year, they're thinking that interest rates will topped out totally. And that would mean, mainly, you're talking about late December Fed. Also, today the Fed minutes come out, but you're talking basically a 0.50, which I think brings us to 4.25. Then they could go okay, we're still going to slow it down. And then the next one would be February, not January, but February, because it's at the very end of the year in December. So it goes like about a six week cycle, I believe it is. And so then the next one would be in middle February. That would be a quarter point, which would be 4.5. And then they may say, depending on how the economy looks at that point, they may say, okay, inflation is in the 6s or 7s. It looks like we've done our job. We'll do another quarter point. And they, because we're seeing quotes of like the six month bond, or 6 month, it's a bill really. It's a interest bearing product. 6 month and 1 year are trading in between 4.5 and 4.7. So that would make sense, and that's what the market's doing. Is it's basically interpreting this pattern, and I thought I would just try to lay it out this morning for you to have a better idea, and that's what it is. And matter of fact, there's the 10-year right now. You can see it's pretty much unchanged now. It seems like from yesterday's, or the thing is that not from yesterday morning, because you can see yesterday morning, if I just make it wider like so, you can see there the. When we were doing the webinar in the morning, it was down in here, trading around in the 4.8, probably like halfway through, something like right around there, not at the top where it closed yesterday. And today it's hanging around the 3.76 to 3.75 area. So it's it's holding on relatively well. It's just down a tick or two. So, and you can see we went into the daily buy yesterday there, and that is that's pretty much where it comes down to. That's exactly what it really comes down to. So it seems like that's the whole chain, the structure of it all. All right, and that's, again, why we see the dollar index trying to, here it is over here on J4X, you see all that red on the daily, and then you see it trying to, there was a little pop, and now it's trying to roll over. And that's pretty much what we're seeing there. You're seeing that pressure on it again. They don't have a real push to take it up, because there's no reason to take it up. The pairs trades should be gaining against the dollar, and that's what we've been seeing. You can see here the let's go over to the dollar index over on the Chicago Quant also. Right there, you see it's been in a little buy here, in that little bounce, but it's still in a weekly sell. There's the weekly sell right there. We've been in a weekly sell. Oh, let's do it this way. right there. It's been in a weekly sell since back in what is that? That's the late part of October. We went into a weekly sell, and it's been sliding down. And remember, we were in a weekly buy for 10 or 12 weeks, something like that. Yeah, from 2, 4, 6, 8. Oop, that's 8 right there, and that is 10. So we were 10 full weeks in a weekly buy, and we had it was all the all-time high rampages going on. We saw the euro go down into the 95s, 96 areas. Got that century mark broken that everybody's been asking about for I don't know, 10 years, 15 years, 20 years. I've been here at Ducascopy. I've been hearing it for 10 years alone. People going, when's it going to go to par? When is it going to go to par? When is it going to go to par? That's what traders call it, par, 100. And sure enough, it has. And now it's back up. And it looks like it'll hold pretty well in this area. I don't see a particular reason for it to go rampaging down again, unless something, Russia attacks another country in Europe. I don't know, maybe something of that nature. I guess I don't know. Even then, think about it. I guess that could be a part of it. But you know what? British pound went down, and the Swiss went roaring up. Wouldn't you think if there was really calamity and the reason currency pairs were moving, we would not have seen 101 or 102 in the dollar pairs trade Swiss. The Saltine would have been like 91, not 101. So it wasn't really the conflict going on in Central Europe itself. It's more of interest rates, because the interest rates, in many ways, it really confirms to us that the world is really, functioning relatively well, which is hard to believe, even with Mr. Biden being the way he is around here. But it does say that the world is more geared towards economic numbers than they are worried about a couple bombs and bullets and a nuke here or there. So, anyhow, let me get the chat line up. I just realized I don't have the chat line, and I'm rambling for, what is that, like 8 minutes I've been rambling. Let's get the chat line up. Oh, I was so excited. Me so excited. Right there we go. And there is crazy advertisement. And there we go. All right. Move that over to there. And let's see. Where's the chat line? Wait a minute. Something's wrong. Now, why don't I see a chat line? No. That doesn't make any sense. I don't see a chat line. Now, how can I not see a chat line? Sign in. Okay, they want me to sign in. All right. There we go. No. Okay, now I got to go look it up. Hold on a second. I got to find the password. Oh, my God. It drives me crazy all day long. Well, if you're saying hi, my name, then wouldn't you think you'd be able to sign me in? All right. Let's go find the password again. So, if you're asking questions, Doc has been on a rampage. He's excited. It's my favorite holiday of the year. The American, well, actually, 4th of July is really my favorite holiday of the year. And then from there is the Thanksgiving. It goes back and forth. Which one's better? Basically, I look at the Thanksgiving as the birth of America, and the religious freedom, and I see 4th of July as the affirmation. In other words, the confirmation 160 years later. So the 4th of July is basically 160 years later than to be exact, it was 1618. William Bradford and the Pilgrims came here. It was the third adventure. First was Jamestown, then there was what was the second one? The second one was Gloucester, where I live, and then the third was Plymouth Rock and the Pilgrims. And so this holiday is based off of the beginning. Oh, I think I'm getting closer to the password. Let's see if I can find it. There it is. Let's see. I think I might even have to. I think I'm going to have problems here, aren't I? Okay, so let's do this. Let's try it. Let's see if we can get this in there. See if this will do it. This should be interesting. Because I don't usually remember signing in on this thing. So, no, that didn't work. So, forgot password. Give me my new one. All right. Oh, they sent me a code. Good. And so, this holiday, these two holidays are very American holidays. You know, in the New World. You know, they represent you know, a whole different genre, I guess you could say. There we go. We got a verification code. Yay! And so let's punch that in, and then we'll be able to go up with a new. Be able to see the chat line. Don't ask me why they did that to me this morning. I always wait to turn on the chat line after I get the what is it called, the OBS going, you know, and when I'm streaming, I always do it after I start the stream because I don't want it to tell me that I haven't signed in yet. So it's like, okay, let's see, where is it at? Right? Oh, okay. There we go. Let's try that again. And then we will be visible to it all. But I've been a chatty Cathy today, so. And there we go. Did I do it right? It looks like it. Let's see. Save password? Yeah. Continue. No, thanks. Wow, they're making it complicated here on me. Okay, let's just minimize that for the moment. And then let's go sign in again to... Where's it at? Let's go sign in to Dukascopi's... Where's it at? Right there. Doc. And then we'll see. In 1 second, we should see the chat line. Okay, where'd my chat line go? Is it down below? Ah, there it is. We got it. There's Robin. There's Janos. Okay. So, I am signed in now, so this is good. We're signed in. All right. Yeah, so this is the action we're seeing. You know, this is the big American holiday, because this is the William Bradford Pilgrims / this is where it all started. They came over. They tried to be socialists. Yeah, they tried to be socialists. They made it so that nobody owned any piece of property, and they all had to share. And I think a third of them died. I guess because they had nowhere. You know, they could. You know, what was it? Margaret Thatcher used to say. Margaret Thatcher used to say is sooner or later, socialists run out of other people's money. That's what she used to say. And so I guess when you're living in wilderness and you try to be socialist at the same time, that's how they interpreted it from the Bible, which was obviously wrong, because then they spent the next 160 years. So then I guess what it was that after a year or almost 2 years of starvation and people dying, that's what the Thanksgiving's built on, is that they then said, okay, you know the land you live on, it's yours. You can buy it, you can sell it, you can rent it, you can not work it, you can do whatever you want. And then they started developing rules for good, clean capitalism. And, you know, in other words, people couldn't take your property, they couldn't steal your food, they couldn't do any of that stuff, because now it wasn't socialism anymore. It was yours. And so if they wanted something of yours, they had to barter with you. And that's what Thanksgiving's all about. Is that they dealt with the local Indians and the indigenous people around here, which didn't believe in ownership of land at all. That was one of their problems. Is that they I guess they controlled territories. Some did, some didn't. But what they didn't do is they didn't believe in like recording property or identifying it as yours. They said no, it belonged to nature. It was just part of the world. And so the Europeans or the English at that point said, oh well, look, then we'll create a municipal building and start documenting it. And that's how that all played out. And then they would invite the Indians to. The Indians had showed them how to, plant corn and I guess other characteristics of the world around here, because I guess it was Massachusetts at that point, and because Plymouth Rock is up in what is today Massachusetts, and so that's what instigated 150 years of religious freedom and capitalism. And so by 1776, we documented our our laws and everything, and we said to the king we're going to be independent. And after 150, almost 160 years of from 1618 to 1776, so what is that? That is 20. That's 158 years. That's what that is, and that's what this holiday is all about. And then the second most favorite holiday of mine is when they documented it in 1776. Alrighty, that's the history lesson of why I am excited today, because we like that stuff. We think it's great. All right, so we've looked at the dollar index, and we've talked about why everything seems to be moving along the way it is. And that is pretty much that's pretty much where we're at this point. It's that combination of things. So I guess we'll go over to the euro at this point, since there's no questions. Security alert. Okay, yes, of course I did. Excellent. So let's jump over to the where's the mouse there? There it is. Let's jump over to the euro. And there is the euro right there. And you can see it's trying to get into the daily buy right there. And we'll go over to J4X and slide that in at the same time. Right there. You see it's trying to turn, I think today it's turning green, right? Yep, look at that. We're turning green there, just like we have a little green dot right here. Let's see if we can widen this. And move that over. See that little green dot right there? It's a red and a green telling us that there's some action coming. But we're still not through the zero line here. And over in J4X, it is jumping through the zero line at the moment. So they're trying to tell us that buy, 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 buy. We'll see. And we are in a weekly, so it's not the biggest risk. We have been in that weekly buy now 5 full weeks. And over here on J4X, I think it's like 6 weeks or something like that. Three, 6, yeah, that's what it is. And you can see, it started back in here in the 6th week, and then, but it's confirmed in the 5th. So, and that's where we are at the moment. It's just marching along, looking good, and like it seems like the lows have been set in, and there's no problems, So from there, what's next? Let's jump over to, what is it? The British pound. Let's see how the pound's doing. And there it is on J4X. You can see the same situation on the weeklies. Right there. So 1, 2, 3, 4, 5, 6 full weeks in the old buy there. You can see that in this case here, it's way up at the top end of its range, but still keeps on climbing, so that's a good thing. And then we'll slide it into the daily right there. And over here on Chicago Quant, no, I don't want to change it. I want to go to it. There we are. There we are. You see there it is in a buy from yesterday. Is that in a buy from yesterday? And the answer to that is yes. So it went into the buy yesterday and is looking fine today. Lifting up nicely. And we've been in that weekly buy just like we showed you on the euro. Same situation. Started off in the previous week, closed and confirmed. And the next thing you know is it's moving along just fine, looking good, and acting fine. Hey, Robin, say hello again, just to make sure my chat line is working. I saw you say hello. Say hi or something like that this time. Or Janos, say hello. One or the other. You said hi before. I just want to make sure the chat line is moving. We're seeing pairs trades, which makes sense to me, is that the interpretation to the marketplace is that interest rates in the States are going to this is the topping area. And so since this is the topping area, it would make sense to me that that's what they do. They basically start to sell dollars, which we've been saying for weeks now that we thought this is exactly what we've been seeing. So they're selling dollars and buying pairs back again. There we go. Good. Yep, it's working. Excellent day. Excellent day. So that is the action. And, we just keep on doing our thing in a sense. In other words, we just make sure this thing keeps on, we keep on interpreting it the right way. And our math is always leads it ahead of time, so that's always a good thing. All right, from there we slide over to the Swiss, and like I said earlier, it was kind of funny that I said it the way I did, and that is that if the war in Europe or the conflict in Central Europe really had an effect on the currencies, I guess we would have seen not 101, but we would have seen like 91. Because they're all NATO, so I mean, if look, think of it this way: if NATO can just hand weapons to the Ukraine and hold the Russian bear with no problem, and it's pretty much no problem. Imagine if we gave them airplanes, and they're not even being offensive; they're just being defensive. Think about it. There'd be no problem at all. So I mean, Europe really has no worries. Obviously, this conflict has confirmed that what we've been believing for like the last 30 years, and that is that we have a very superior free market, free capitalism, free people defending their property and not intimidated by intimidators. And Janos, you're on the front lines. You know it better than most. I guess if we parked 4 or 5 F-35s over Ukraine, the war would be over with, right? Be done. Done. 2 or 3 of them. I know they parked, when it first started, they parked 2 F-35s at a Romanian airbase within the first day or two. That was probably to make sure that if they got carried away, the 2 F-35s would make sure that they didn't bleed into NATO. But after watching all the giving the Ukrainians all these weapons, obviously it's not exactly working out the way the aggressor thought it was going to work out. It's working differently, because that's the best way to describe it. Working differently. So, and again, that goes right to the currency pair value. This is not politics. This is obviously we're looking at the math and we're saying, isn't that curious? That the Swiss franc went to 101, not 91, which means basically it was just interest rates that drove everything. Oh, and also there were some banking problems in Switzerland with one of their local banks. The combination of all that really hurt. But what was really odd is that the yen and the Swiss franc were marching together. That was the interesting part. And there we are. There you can see now. There's that's the Swiss franc. Let's get it up on J4X. All right, there. The Swiss is down to 95 now, and you can see we've been in a weekly sell since that century area up in there, and that topping out there. Put a buy in that was in the buy there. Let me just throw the buy line in there for you. There we go. So it went into the buy there again, and it was in that weekly buy. It was in a weekly buy. Let me just tighten it up here. You'll be able to see. Swiss was in that weekly buy, I think 11 weeks. 2, 4, 2, 4, 6. That line needs to be moved down, like so. Was it 2? There's 3, 6, 9, 11. So it was at a buy for 11 weeks, and then it topped out right there. And then obviously, because our math told us what it wanted to do, we don't tell it, it's telling us. It tells us what's going on. It goes into that week. When it went in a daily sell there, it was in a daily sell all the way up until last Thursday, I guess it was. Last Wednesday. It gave us a volatility signal right there. As you can see, a green and a red. And then it marched up with a daily buy. But it just told us that, well, keep some of this money that you made by following our math and following J4X. Figure a way to keep it in your pocket. Don't give it away. And that's J4X did the same thing. It turned green. The green line was above the dashed line. And it was saying, keep the money. Show me the money. That's what it was saying. Show me the money. And there it was. It showed you the money. And did you take your profit? Or were you trying to buy a new Mercedes instead? All right. From there, we zip over to the yen. And it's interesting how it had that same characteristic and literally almost the same rampage. So it was like three weeks, then there was 6 weeks, and then there was 9 weeks and 11 weeks. So they both stayed in weekly buys for 11 weeks. Curious action. Very curious. Don't understand exactly what was scaring the two of them like that, but obviously it was something. And you can see the same thing. It said, show me the money. There it is. Take it. Money in your pocket. Keep it. Spend it. And it is kind of curious at times when they don't. It really seems odd to me. But they do. That's the way it rolls, And it's like, I don't understand the logic to it all, but that is the nature of it all. And it just kind of, it's like, okay, yeah. It's like I keep on telling people, Robin says the same thing. It tells people that, you're up 100 grand. Why can't you just keep it? You're up 250,000. Keep it. Don't double up. Keep it. And we always say that around here, traders. The idea is to make money, not to trade. We want to make money. So if the account gets fat over a good trade, take it. You can always go trade again. But if you don't take it and you end up losing, and then it's like, oh man, it seems like a defeating purpose there. All right, let's see where we at. There is the yen, and let's look at the weekly. Right there's that long rampage, and it's it's 3+ weeks in a sell now. Going on a fourth right here. And you can see that good stuff going on over here. It was an interesting plateau, whereas the Swiss just broke down. Over here, they kind of found a way to, I don't know, what's the word for it? They just kind of hung out, All right, from there, let's go to, let's see where we're going to go to from there. We'll go to, oh yes, we go over to the Turkish lira. Let's take a look at the Turkish lira. Right there, there's the dollar Turkish lira. And, it is flirting. Looks like, I guess we could say, today, traders, what we do, it's really hard. Pretty much all products I pay attention to. If the weekly sell closes today, chances are it is a weekly sell for the week. It's very rare for me to change that. So in other words, today is Friday to America, and the what's it, $100 trillion financial market, and the United States controls, or is, basically in the United States it's over 50 trillion in the United States alone. So the rest of the world, in other words, if you lose half your traders in a day, the pit becomes thin, and the rest of the world starts to think, only if I need to close this out, or I need to open a position, or I need to take a profit, or I need to hedge. That's what forces them to trade when it's slow. Illiquid markets, people usually only trade, professionals only trade when they have to trade, not because they want to trade. In other words, they're not following through to their normal rhythm of trading, and moving their portfolio around, because that's what happens. They really are. And I could give you a quick 1-minute explanation of what I'm saying. That is that a fund usually will take X amount of money. Let's say it's a $2 billion fund, and what it'll do is it'll invest about 80 or 90% of it into the market, and leave maybe 200 million or 300 million to the side for other things like bonds and cash and so forth. And then what happens is that they buy everything in equal percentage. So money wise, not volume wise. So in other words, if you're buying $100 stock, and you're doing it in percentage, you're buying 2.5%. And then at the same time, if you're buying a $50 stock, you're buying the same thing in dollar terms, 2.5%. So they have, what happens as something gains in value, they will sell some of it out. So in other words, you have a stock that you bought at 50 and it goes to 55, maybe 60, and that's what they were looking for. They start to lighten it up and bring it back down to the 2.5% area of asset. So they take profits. And vice versa. If it drops to 45 or 44, then they obviously buy it to bring it back up to 2.5%, if they still believe that it's doing what they expect it to do. The earnings and growth and all the other things. And so that's how that works. And so that's why during the holidays they tried, like a situation like this, they will only go in if it gets really out of whack. They will, depending on the size of what they have to execute and so forth. It's so thin because half of the world is on holiday. They'll like, we'll wait till Monday. They'll do it that way, and that's how that usually works. All right. So from there, we'll go over to, and that's the dollar Turkish lira. So this 42 weeks in a buy that we have right here, we can basically figure that it's going to end, and we're going into a weekly sell. And that's we were hoping to see it do its 50 some odd weeks. Didn't have to go anywhere. It just been, we've seen it do 54 one year. I think we saw it do 49 another year. Remember, the product has gone from 1 to, where's it at now? 1862. So we've seen this product go from 1 and change to 1862. So there's been some really rampaging years where it just goes on and on and on. Alrighty. Still quiet out there. No one's saying anything. Interesting. Very interesting. Maybe I'll throw a smiley face up there. For the holidays, is there a turkey I could put up there or something? Let's see. Not there. Let's see if we can find... Oh, maybe here we go. Maybe we can put a turkey up there. Find a turkey emoji and stick that up there. Sometimes they have these animals and birds and things like that, and you can actually do that stuff. See if we can find a turkey. So that's how money managers work. And when you go into a holiday, people kind of kick back unless there's opportunity. All right, from there we drift over to the Euro Turkish lira, as we like to call it, is location, location, location. And you can see there it's still staying in a weekly buy. It's holding up very firm. It's moving. It's in a daily sell for. This is the fourth day. So if this thing gets back into a buy, I'd imagine we're going to start to see some turn there. Um, we really haven't seen anything particular, but there's a possibility that we will. Oh, there we go. I think I found a turkey. Hold on a second. I'm seeing animals. There's a chicken. Let's see. There's a duck. I could put that up there maybe. Okay, let's go back to that one. There we are. Let's see what that is. That a duck? What is that? We're saying that's a turkey. How's that? There's a turkey. There's a turkey. So, yeah, that is the answer to it all, really. That is it. Now, from the you can see that the euro. The euro is see ya, Robin. See ya. There's the nothing more to be said really about the euro and the euro Turkish lira pairs trade. And do we? Oh, let's put it up on J4X just to give a flavor of it all. Just to confirm our analogous. I think that's the word. Look at that. Wow, the green line and the dashed line is banging against each other. It's been in that nice tear on the upside for like 5 days. 2, 4, 6, 7. And now it's just like banging against itself. But we're seeing some interesting action there, in the sense of the way it hasn't gone anywhere. No wonder. Look at all the banging around it's doing. We're in a daily sell. Oh, that's the weekly. Forget about that. Forget about it. There we go. There's the daily. It's rolled over. Okay. Yeah, it's doing what it should do. So for the last 2 days, I guess it's a nothing there. So the last 2 days it was in the sell. Today it's trying to get back into the buy. And you can see the green line piercing through. Ours is trying to get up there. It hasn't done it yet. And at the same time, we do have a red and a green going on when it comes to the bar itself. And so that's the action. All right, from the... Oh, there's Robin. What's that? That's interesting. I just saw your email. And guess what, Robin? It didn't come in through... it didn't come in through the... what do you call it? Spam. 12 Hakal facts. Interesting. Very, very interesting. Thank you. Yes, I probably heard that last night. That's where I was last night. Do you see the pictures? Did I put the pictures up? Well, I think I did. Let me see if let me find those pictures. They're around here somewhere. I'll send them over to you afterwards. Me making challah. All right. From there we drift over to, I guess it's basically in the end as we go to the currencies that kind of they follow along with commodities. So in this case here's the Canadian dollar. It's been lifting, so it's losing value against the American dollar. And at the same time, in the oil market, let's put the oil market up on J4X so you can see it kind of side by side. Right, there's West Texas Intermediate right there. You can see it's been losing value. And so when oil gains value, the Canadian gains value, which means it's going like this, down. Okay, when the Canadian is going up, we assume automatically that oil is going down in price. It's losing value. Let's show you to you over on Chicago Quant. Right there. You see that it's been going down in value. They tried to pop it yesterday, but here we are back underneath 2 days ago's close, or Monday's close, and we are in a weekly sell. And the good chance, unless there's something dramatic, that's it. This is, you can basically put a fork in it. It's in a weekly sell for a third week. All right, and then from there, we will flip it around and put the Canadian on J4X. So you can see it that way again. See that? It's been marching up, and oil's been going down, even with that big deep sell-off, and then a pop by the end of the day, and then popped even more yesterday. Today they're selling it back down again. The pressure's on, and we're still in a sell, as you can see right there. We're still in a sell. So you can see that weekly is going to be a third week with no problem, and we're going to go into a fourth week. Came from my personal email. No pics. Oh, I didn't get that deep into it. I can see I see there's attachments, so I'll take a look now. Let's take a look and see. Not there. Not there. Not there. Ooh, maybe this one. The fourth one might be a picture. Nope. I don't see any pictures in there. Let's see. Oh, I guess if I click on, I don't want to click on it. Is it voice too? Because if it's voice, it's going to play onto the webinar. Oh, no pics. Okay, there is no pics. Okay, cool. That's no problem. So, from there, we jump over to the next one, which is, and we'll throw it up on J4X first, and that is the South African Rand, right there. That's why it didn't go to spam. I'm not sure. That's okay. I'm happy with it. But I double check both of them all the time now. I go into spam dozens of times a day now. Because it's not only you. I think there's other stuff that comes over every so often that's in there. It's like, what is that all about? So there is, you can see South African Rand is going down, okay? And that would mean that gold has been going up. Now, I do know gold, last I looked this morning when I sent out the charts, gold was still in a daily sell and going down also. And so normally what happens is that the South African Rand goes up when this is going down. So let's put the South African Rand here, and we'll switch it around and put gold over and over there. And there is the South African Rand, and that's interesting, isn't it? So this is trying to tell us that gold is going to be bought. That's what it's telling us. They're going to try to buy gold. So we are, where are we at in gold? Let's put gold up on there like that. There's gold again. So we're in a weekly buy with no problem. It's going to basically close here. This is one of the only products that could change by the end of the week, but I doubt it. As far as I'm concerned, it's in a weekly buy because the Americans are going to be gone tomorrow, and no one's probably going to be paying attention on Friday. So unless some major calamity occurs, it's another week in a weekly buy. And you can see the last 3 days, gold has gone nowhere. So don't be surprised if we start to see some strength in gold, especially with the Federal Reserve out eating turkey. Maybe this way someone will forget to beat it up. I mean, it seems like the central banks are the ones that beat it up anyway. Oh, that's good. That is good. All right, now from there we go to let's see. Oh, let's put gold in here. There it is, right there. You see that it's flat-lined also, and this thing is getting ready to turn up on J4X on the daily, and obviously the weekly is firm. I'm sure. Yep, look at that, firm. Kind of trapped, but still firm. No, trapped underneath the highs and all, but still firm. All right, and then from there, we march our way to the south of our border. We go take a look at, we finish up our currencies here, and we take a look at the Mexican peso. So there it is right there. And the peso is breaking down again. We thought it was going to hit that. I think they are definitely interpreting that we're going to see a little bit more functionality again. That's what the problem really is. The functionality of the markets are really upside down. Because of the economy and so forth. Our political function, I'm talking about. Our borders wide open. People are pouring through it. Matter of fact, the Republicans yesterday told them that they're going to investigate and they expect him to resign. The fellow in charge, if he does, if the evidence shows that he's been doing bad things. There's a massive amount of forward contracts for delivery on the London Metal Bank has to deliver. This is the major drive for gold. Ah, interesting. So there's going to be a push on the upside. Is that why South African rand is dropping more? So they're already front running it. They already know what's needed. Does that make sense? Yeah, Mallorca. The Republicans came out yesterday and down on the border. They said it to them. 500 tons of gold. Wow, 500 tons. I think I saw a story yesterday that said that the Chinese bought the 2,000 tons from Russia. 500 tons. Okay, so it's like a quarter of what transacted a couple of weeks ago that started this push. Interesting. Well, that's really that would make sense, and that's why we're seeing the South African rand move down. Let's see. Ah, I didn't realize there was a shooting in Colorado. A LGBTQ guy or gal shot up a bar. Or I don't know what they shot up. They shot something up. A club. Okay, they shot up a club. Yeah, now we got the Fed minutes this afternoon. So that'll be interesting. I don't see anything about the gold. That's cool. That makes sense, though, because we're seeing it in the prices. All right, and there's the peso. Let's put it up on J4X before we leave the currencies here. Right there. And you can see there's the weekly. All that pressure, like the same as we have on J4X right there. All that pressure, right there. So we see that. Let's go to the daily. Right there. It's breaking down today. We did close in a daily sell yesterday. So J4X is joining in on that one too. With no problem. And there we are. You can see that. And, and that would make sense because of everything. YouTube Kines Money explains. Kines. What do they explain? Keynesian? Like the financial concept of government spends money to make economies grow when in fact it doesn't work. Yeah, that's the action. All right, we're done there on the currencies unless someone wants to see some currency, but so far we have not seen anything. Oh, the London situation, yeah. I thought they were closing that down. Weren't they going to close that down? That's why they, that arbitrage between cash and future has fallen apart totally. That seems to be part of the process. Looks like they're selling the stock market down a little bit. Nothing major. It's up still for the day. This is the S&P 500, the intraday game. See it there? There it is right there. Went into the sell right there. Actually, went into the sell right there. And then the oscillators started confirming it. And then fell down from the 16s to, where's it? Around the 10s now. So, in the last few minutes. Yeah, no more forward contracts. We saw they had come to that conclusion. I guess they were getting their heads handed to them. This central bank thing where they manipulate the physical gold. It's got to start to end somewhere along the line. I don't see it benefiting America pressing gold down Because I believe America controls over 50% of the gold in the world. So why would we care to knock it down? I guess they're trying to. Remember, QE, quantitative easing, was to help after the world went bankrupt. Okay, in 2008. The idea of QE was for it to. I just grabbed some peanuts and ate them. Sorry about that, folks. The idea was to regrow these companies so that the status quo would survive. In other words, you do stupid things in business, you're supposed to go out of business, right? You lose money, everything goes under, you lose, you remove these people from being in charge of money. But quantitative easing, the objective was to keep stability. So in other words, you're a real dumb corporate chair running a company. You've just driven your company into the ground. And the central bank comes out and gives you money to keep you afloat. And so, all they've been doing is doing the status quo. They've been trying to keep since 2008, and now we're in 2000 going into 2023. Almost, what's that, 15 years. They're just trying to keep people that were responsible for the mistakes in their jobs, which is really weird. They should be out of their jobs. So, my point out of all this is that why would they knock gold down? I guess so other countries who don't have gold get an opportunity to build up in gold, and maybe they're going to try to do something with that, or maybe it's just a stabilize. I would say they're not going to, they're not going to back gold to a currency. No way, because everybody will exercise it. That's why it's so childlike when the Chinese say they're going to do things like that, or the Russians. At least the Russians, they produce 13 or 12 million barrels a day. Okay. And they're going to lock their currency to oil. Okay. So they already got the oil. In other words, if someone says, okay, I'm going to grab rubles and exercise them and take your oil, they're like, fine, be my guest. But gold, no one's really manufacturing gold that in that great a quantity. You back your currency with gold, and then what happens when people try to exercise your currency and you don't have enough gold, you're giving your gold away. So that makes no sense. Unless you can manufacture gold at a large clump all the time, it doesn't make any sense to back it. Or you'll go bankrupt. That's pretty much what it comes down to. You'll go bankrupt, in gold. So I don't understand the only way I can understand why the central banks are pressuring the price of physical gold all the time is so that they can buy it. Obviously not sell it. Well, it's an odd thing. Very odd. All right, let's go from there. We'll go to gold. Let's take a look at it again. We'll go to the metals. And there's gold. We'll put it up on J4X. You can see it's in a daily sell, but in that weekly buy as we showed you a little while ago. Now, let's take a look at silver. And let's put it, and let's do this too right there. There it is right there. There's gold. And, it's in a weekly buy, and it's, it's just a mild correction from the 1780s. Excuse me, down into the 1730s. It's just $50. I mean, it did come from 1620 when it first took off, and went from 1620 to basically almost 1800. So it was a $180 move over a 2-week period. Now, over a 1-week period, basically, it's going down about $50, $40. So it's not giving it up. It's not like they're throwing it out the door, It's definitely not being thrown out the door. All right, let's take a look at silver. Excuse me. Let's see, silver. There's silver on J4X. One of those peanuts went down the wrong way. You can't talk and eat peanuts at the same time. Note to self. Do not talk and eat peanuts at the same time. All right, you can see there the daily buy is trying to press itself up. Let's see what it looks like over in Chicago Quant. Right there, doing the same thing. I think that's the second. Look at that. We got 2 days of red, green. And this morning when I sent it out, there was just a green. So I had the line in there. And we'll see what they do with it today. But there's obviously buyers coming in for the silver. And you can see on Chicago J4X, you can see the green line breaking through the dashed line. And you can see here we are developing a green today. So same game going on there. All right, what else we got to say about that? Let's go over to what? Copper? Let's see what's going on with copper. Okay, there it is. Oh, okay. All right. From there, let's take a look at copper. And there's the copper. And that has been seeing a lot of pressure. And until it gets over to the $5 range again, I would say that it's trying to tell us about the China economy. That's what it's probably trying to tell us. That's pretty much, what I think about it. Unless we get growing here. But I understand that I saw a report this morning. The one big thing about copper is usually, building homes and so forth, and construction. And I understand that one of the analysts I was listening to said that cancellations were around 5% last year. This year they're up as high as 25%, but growth is still there. But cancellations have increased dramatically. So in other words, people said, "Oh, I want to buy that house," and out of 100 of them, 25 have now contacted the builders and said, "You know what? I've changed my mind. Don't buy. I don't want to build the house anymore." So now we've seen. I think in 2005, it took all the way to 2008 before it had a real effect, right? And that's when I started realizing, the crash coming, and did real well in 2006 and 7. With the stock market, knowing that the crash was coming. So it is what it is. All right, traders, we're out of here. Everybody, we will see you tomorrow. Doc will do a webinar tomorrow morning with no problem at all. Because I love doing my webinars. I love to talk about the world of markets and the world economy and the whole bit. So, the leadership and how it helps our economy, or the leadership how it hurts our economy. And so on. So this is Doc from North America saying, everybody, happy Thanksgiving. And we will see you tomorrow. Same time, same channel. So, happy trails to you until we meet again. Happy trails to you, to all our Dukascopy friends. Later, traders. Arrivederci.